Hey everyone, welcome back to Corporate Decoded, the place where we try to unravel the mysteries of corporate filings. And today we've got a filing from Fennec Pharmaceuticals Incorporated that is all about a new stock offering. Prepare yourselves because it is a bit of a deep dive into how companies raise money through the stock market. Before we dive in, if you are new here, make sure you hit that subscribe button and the notification bell so you never miss an episode. Also, we have a fantastic Discord community where we discuss these filings in real time. Check out the link in the description below. So what is the big news? Fennec Pharmaceuticals Incorporated is planning to sell a bunch of its shares to the public to get some extra cash. It sounds simple, right? But the devil is in the details. And today we're going to break down exactly what this means for the company and potentially for investors. This report is from Fennec Pharmaceuticals Incorporated, a company that is incorporated in British Columbia, Canada. They've got a commission file number of 001-32295, and their main executive offices are located in Research Triangle Park, North Carolina. The date of this report is the 13th of November 2025. The company's common shares are traded on the Nasdaq Capital Market under the ticker symbol FINC. Now let's get to the juicy part, the reason for this report. On the 13th of November 2025, Fennec Pharmaceuticals Incorporated entered into an underwriting agreement. Think of this as a big deal contract where they've agreed to sell a significant chunk of their company's stock. They're working with Piper Sandler and Company and Craig, Hallam Capital Group LLC, who are acting as the representatives for the underwriters. In plain English, these are the investment banks that will help them sell the shares to the public. Fennec is looking to issue and sell a total of 4,666,067 common shares. The public offering price, meaning what you or I or any investor would pay for these shares, is set at $7.5 per S-share. Now, the underwriters aren't buying these shares from Fennec at $7.5. They're purchasing them at $6.975 per S-share. This difference is essentially the profit the underwriters make for their services in selling these shares. It is a pretty standard setup for how these stock offerings work. Here is an interesting bit. The company has also given the underwriters an option. This means the underwriters have the right for the next 30 days to buy up to an additional 700,000 shares at that same public offering price minus their fees. This is a common way for companies to potentially raise even more money if demand for the shares is strong. The entire offering is expected to wrap up on the 17th of November 2025, provided all the usual conditions are met. This whole stock sale is being done under a filing called a prospectus supplement and a related prospectus that was filed with the Securities and Exchange Commission, often referred to as the SEC. This is a requirement to inform potential investors about the details of the offering. It is all part of a larger shelf registration statement that Fennec had already put in place. Now, shifting gears a bit to another section that is important for understanding the public's perception. This section talks about other events, and in this case, it's about press releases. Fennec released a press release on the 13th of November 2025 announcing this planned stock offering. They also released another press release that same day to announce the pricing of the offering. These press releases are attached as exhibits to this filing, and they're meant to communicate the news to the public and the market. You'll often find that the language in these press releases is designed to be positive and encourage investor interest. Finally, we get to the list of exhibits, which are essentially the supporting documents for this report. This is the actual underwriting agreement we talked about, the main contract outlining the terms of the stock sale. Then there is an opinion from a law firm, LaBarge Weinstein LLP. This is likely a legal opinion confirming that the shares being issued are valid and legally sound. And of course, the press releases we just discussed are included here as well. These are the primary ways the company communicates significant events to the public. And finally, the cover page interactive data file, which is for all the digital tracking, a lot of the more technical stuff for regulatory purposes. Now let's talk about the signature block. This is where the company officially signs off on the report. This particular filing is signed by Jeff Hackman. He is the Chief Executive Officer of Fennec Pharmaceuticals Incorporated. He officially signed this report on the 17th of November 2025. His signature indicates that he believes the information in this report is accurate to the best of his knowledge. So what is the big takeaway here? Fennec Pharmaceuticals Incorporated is raising a considerable amount of money through a public stock offering. They're selling new shares to the public at $7.5 each, and the underwriters are helping them make this happen. This is a pretty common move for companies, especially those in industries like pharmaceuticals, where research and development can be incredibly expensive and require a lot of capital. The extra funds raised will likely be used to fuel growth, perhaps for new drug development clinical trials or expanding their business operations. However, for investors, it is crucial to remember that issuing more shares can dilute the ownership stake of existing shareholders. This means that each existing share will represent a smaller percentage of the company after the offering. It is a balance between raising needed capital and potentially impacting the value of current holdings. From a Warren Buffett perspective, you always want to see companies raise capital for good reasons like expanding profitable operations, not just to plug holes. In this case, without seeing their full financial statements, it is hard to say definitively, but the act of raising capital is generally positive if the company has a clear plan for its use. The opportunity here is for Fennec to fund its future growth and potentially bring more innovative products to market. However, the risk is that the market doesn't respond as well as anticipated, or that the funds aren't used effectively, leading to a dilution of value for shareholders. Alright, that is our breakdown of this Fennec Pharmaceuticals Incorporated filing. What is your take on this stock offering and what Fennec might do with the money? Drop your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more corporate deep dives. And don't forget to join our Discord community linked in the description. Thanks for watching. See you next time.